Now let's look at a detailed preparation of the income statement, which is the profit and loss statement, as well as the balance sheet of a company based on the details that have been provided, right? So let's look at them. So these are extracted as on 31st August 2005, and I have to prepare the profit and loss statement and a balance sheet up to that particular period itself. So the better thing for us to proceed with is I'll take a spreadsheet, right? I'll see which all elements go as a part of the balance sheet and as a part of the income statement. So let's start off with item by item. Advertising. It goes as a part of selling and administrative expenses into the income statement, or selling and marketing expenses, whatever is the typical headings we are going to call. So let me initially talk about an income statement, right? And here I would even take a balance sheet, right, for the year 2005. Both of them I'm going to take for the year 2005. All right. Let's see item by item, and wherever something has to go as a part of the notes, we'll take it. Advertising is 90. So advertising typically goes as a part of the typical selling and distribution kind of expenses. So I'll take it advertising as 90. Cash at bank, I can directly take it as a part of the current assets here, right? Or probably what we can do is we can give a broader structure first of all, and see whichever numbers are there we can directly put into the structure. So in general, it is the sales, then we have cost of sales, and based on that we are going to get gross profit. Then we have administrative expenses, right? Then we are going to have selling and marketing and distribution kind of expenses. Based on these two, and we have depreciation. So all these things are typically contributing to the operating profit. And from here, other income, which is from non-operations kind of stuff. And I'm removing the interests, which are the finance costs. And from here, what we are going to get is the earnings before tax. And from there, we are talking about the tax, and which is resulting into profit after tax, dividend, and from here, from that dividend is what coming out to uh, whatever is the balance of the previous period, right? Or probably uh, carried to balance sheet, or probably what we can available to carry forward, and probably brought forward from the previous period. So based on this, I can talk about carry forward to the balance sheet for this particular year. So this is what we are trying to present as a part of the income statement. And as a part of the balance sheet, I can classify it, okay, current assets primarily. And within that current assets category, we are having inventory, we are having cash and bank balance, and we are also talking about accounts receivables, which are the debtors. Similarly, we also have fixed assets, which are okay, I'll put it as fixed assets, wherein we have tangible, and tangibles are the major for this company. We didn't find any intangible assets. Fair enough. So we can have investments we have, and based on this, we are having the total assets. So asset side, this is what it is. And on the liabilities also I have current liabilities, wherein creditors, which are the accounts payable, provisions for tax. So a few more things, if at all they are there. So this is what is contributing to the current liabilities. Then we are having the long-term liabilities or non-current liabilities, wherein we are talking about the loan amount, and we can talk about the share capital, and finally brought forward, which is the reserves part, reserves and surplus coming forward from the profit and loss account. Overall, we are talking about the total liabilities and the owner's equity. So now from the data, we can start filling up the stuff, and then probably we could see what all calculations are required. So from here, if I am simply moving cash at bank is 8, so I can directly take out into the current asset. Then creditors and debtors. Creditors is 52, debtors is 134. So I'm taking the creditors here, the debtors I'm taking as 134. So these two are also done. Right, it's better that we mark them. The director's remuneration typically goes as a part of your administrative expense. So okay, administrative expense right now I'll put it as 85. And similarly I can do the advertising. I can put it as a part of selling and marketing expense, which is 90. So I'll just simply add up as 90. Then head office running costs, which is 200. Even that head office running cost comes into the administrative aspect itself. So I'll add another 200 to it. Okay, 285. Then interest on long-term loans, which is an interest expense. This interest expense of 9, I am directly taking it into the P&L statement. Then I have an investment income of 20, which is the other income. So I'm going to take it as 20 positive. Now the investments long term, they are 450, which is a part of non-current asset. So in assets non-current part, I have 450, which are the non-current assets. Then there are long-term loans worth of 400. So here I am going to take a long-term loan of 400. Right? Material and other manufacturing costs, which is adding up to your cost of goods sold. So in the cost of goods sold, I'm going to put 800, which is materials and the manufacturing. Ordinary dividend paid in this particular, the dividend that is already paid. So the dividend that is paid 60, I'm going to consider it here. Then ordinary share capital. The ordinary share capital is 900. So I'll try to put it here as 900. Then plant and machinery, the cost of it is 250. Right, plant and machinery, which happens to be a fixed cost. The plant and machinery, which is a part of your fixed assets, is coming out, the plant and machinery cost is coming out to be 250 at this moment. We'll try to make the adjustment. Plant and machinery depreciation at 31st August means by that time the plant and machinery has already got depreciated by 100. So accumulated depreciation was 100. So overall the value is only 150 by now. Similarly, premises, the cost is 1200 for the premises. Okay, so here also that is also a part of the fixed asset. The premises is going out to 1200. You can very well detail out each of these calculations on a at a separate space. So 1200 is the premises cost there, and the depreciation on the premises till date is 15. So the depreciation of 15 has to be taken out. So the current cost is 1335. Profit and loss as on 31st August 2004 is 374. That part is coming out from the previous statement. So that's where I'm taking 374 here. Sales is coming out to 2200. So I'll take the sales as 2200. Then the stock at 31st August 2004, which would be taken into this current year. The stock of 2004, I'll add it to my cost of sales. So I'll add 210, which is bringing out the stock as of 2004. Wages and salaries of the administrative staff 110. I'll add 110 to my administration costs, and then wages and salaries of the manufacturing staff. This can go as a part of the cost of sales. So I'm adding another 400 to the manufacturing, which is the cost of sales, and wages and salaries of the sales staff. I can put it as a part of selling and administrative distribution kind of expenses, wherein I am going to add 55 there, right? So by now, if I'm just making these entries as of this, my gross profit has to be this minus this, which is working out to 790. The depreciation we have still not taken. So from the gross profit, I am subtracting these three elements, which will take my operating profit to be this much, and my EBT is going to be operating profit plus other income minus the interest. So this is what is going to be my EBT. I did not look at the taxes still. So the taxes are going to be EBT minus the tax, and out of the dividend, whatever this number minus the dividend is going out to be available to the carry forward to the balance sheet. Last year's balance sheet is this much. So overall the amount that is put into the reserves and surplus is going to be this much. So here I'll put my reserves and surplus to be this, and overall if I'm seeing right now as it is, if I have to see, my total assets are going to be this much, and what about my total liabilities? At this moment my total liabilities are also going to be this much. So until here my balance sheet is balanced with, of course, a few more entries to be typically made. Okay, let's try to understand what these entries are. Premises are to be depreciated at 2% on cost. So for the premises, I'm going to take 2% on cost. The cost is 1200. So I'll take, from the depreciation standpoint, I'll take 2% of 1200. So which is 24 is coming out to be the depreciation here. Now that I am putting a depreciation of 24, in my fixed assets I am going to reduce by 24, right? So still things are fine. Now plant and machinery at 20% on the reducing balance. Plant and machinery, when I am talking of reducing balance, the cost is 250, till date 100 has been depreciated, which means only 150 is the amount that is still remaining. And that is, I mean, in a reducing balance, we are always subtracting the accumulated depreciation from the cost, and we are applying the depreciation on the top of it. So we are applying the depreciation of 20% on 150, which is giving me a depreciation of another 20, 30. So I'll take it as 20% of 150 as well, which is another 30. So I'm subtracting another 30 from this list. Okay, so that is what is my first information here. Corporate tax based on the year's profit is estimated at 25,000. So I can directly take out the corporate tax. I'm not computing it. It has been estimated directly at 25. So I'll take the corporate tax at 25. Right. I'm taking the corporate tax at 25. And here probably I might not have paid the tax. If I have paid the tax, at least it should reflect in my cash going down, or if I have not paid it, the provision for that tax has to get added up. So I am adding up that 25 as a part of the provisions, which is keeping this as my number. The company's ordinary share capital is 900. Right, the company's ordinary share capital has come out to 900, which we have already $1 ordinary shares fully paid. Directors have proposed that no final dividend will be paid, so no more dividends coming out into this. And stock at 31st August was 180, which means the inventory is coming out to be 180 here, and this cost of sales should be reduced by 180. So this is what is my situation at the end of the period. These are the numbers that are present in my income statement. These are the numbers as a part of the balance sheet, and the final statement is fully prepared. So we can go in a step by step kind of a manner and typically complete of the preparation, and at the end we have to see that the financial statements are prepared as per the typical standards. So one way is I first segregate them into current assets and non-current assets, current liabilities and non-current liabilities, and finally share capital and reserves as well. And once this financial statement is ready, any kind of further calculations can quite comfortably be done on the top of it, right? So this kind of comfort level is very much expected. Once the from the various accounting books, the various data has been picked up, we need to have a clarity on how these financial statements and financial statements, which are the profit and loss statement as well as the balance sheet, get prepared. All right.